morning, ladies and gentlemen. My name is Vasildikov. I am a senior account manager with GDMFX, and I will bring you today's market outlook. We'll start with the North American markets and the events from there. We had the personal spending as expected 0.4%, core personal consumption expenditure price index for the month as expected 0.2%, and for the year same as the previous at 1.6. Personal consumption expenditure price index for the month 0.1% less than previous at 0.2, and for the year 0.2% less than previous at 0.9. Personal income 0.1% less than the expected 0.2%. Pending home sales for the month 2.8% weaker than expected -3.8. For the year 0.6% higher than the previous 2.4. We had the back stress info, and the big US banks won permission from regulators Wednesday to boost dividends and buybacks, offering investors some welcome news after the sector got hammered when the UK voted last week to exit the European Union. All but 2 of 33 institutions passed the final round of the Federal Reserve's annual stress tests, conducted to gauge how such firms would fare in new financial crisis. US banking units of Deutsche Bank, Santander failed, same as last year. Morgan Stanley's approval is conditional, and bank has to resubmit capital plan. Also, new data shows that traders are pricing in a 0% possibility for a rate hike in September from the Federal Reserve. The Dow Jones was 35 points up, the Nasdaq 85 points up, the DXY is down to 95.88 from 96.10. The US dollar is 85 pips down versus the Canadian dollar. Today we're going to have the initial jobless claims in the US, the Chicago Purchasing Managers Index, and from Canada we're going to have the GDP for the month. Moving on to the European markets. Yesterday we had the business climate, which came out with 0.04 weaker than expected, 0.22. The economic sentiment indicator was 0.3 weaker than expected at 104.4. The consumer confidence was -7.3, no change there, and the service sentiment was 0.2 weaker than expected at 10.8. Today we're going to have from Europe the German unemployment data, along with the Swiss KOF lending indicator, also CPI from the Eurozone and core CPI preliminary. Also, there are going to be the ECB monetary policy meeting accounts report. Moving on to the UK, the consumer credit for May is £103 million, better than expected at £1.503 billion. Mortgage approvals for the month made 1.72 thousand, better than expected at 67,000. GfK consumer confidence 1 point better than expected at -1. Now, sterling weakened during the Asian session after recovering 1.5% the last 2 days. With the Brexit hysteria starting to settle down, the markets are also becoming a bit more stable. Today, Mark Carney, the Bank of England governor, will have a preemptive press conference with industrial and financial leaders where he will aim to ease their concerns and explain how the Bank of England will tackle the economic and monetary freefall after the Brexit vote. And while the currency markets still remain nervous, the FTSE 100 took only 4 days to recover from the Brexit shock. The index of the UK leading companies gained 8.5% over the last 4 days and is at pre-Brexit levels. So the FTSE 100 gained 139 points and closed at 6,288 yesterday. The pound versus the US dollar was 92 pips up. The pound versus the Japanese yen gained 125 pips, and the pound gained another 120 pips versus the Swiss franc. Today in the UK we're going to have the GDP year on year and the GDP quarter on quarter. Proceeding with the Asian markets, we had the industrial production for the year preliminary in Japan 3.2% better than previous at -0.1%. Industrial production from Japan for the month preliminary 1.8% worse than the previous at 2.2%. And weaker than expected with -2.3%. Financial markets continue to recover from the panic selling triggered by last week's UK vote to leave the European Union, with Asian stocks rallying. Japan's industrial production declined more than the economy's forecast as a drop in exports hit most of the country's manufacturing sectors. The yuan's worst quarterly performance on record is raising the risk of capital flight. Outflows seen are rising. Now, press reports are showing that Japan Prime Minister Abe, German Chancellor Merkel, and the UK Cameron Prime Minister are likely to have a meeting over the conference call on Thursday, although time of the meeting has not been mentioned yet. The Nikkei 225 is 227 points up yesterday, 150 down today. The Canadian dollar versus the Japanese yen is 64 pips up. The Australian dollar versus the yen 75 pips up, and the euro versus the yen 65 pips up. The US dollar versus the Chinese yuan is 213 pips down. In the Pacific, we had in New Zealand the building permit seasonally adjusted for the month of May 7.1% weaker than the previous at minus 0.9%. And finally, the commodities section of the market, the EIA crude oil stock exchange fell 4.1 million barrels in the week of June 24th, the sixth consecutive week of drawdowns to 526.6 million barrels. Oil prices fell in early on Thursday as fears over strike outrages in Norway faded as Nigeria's production improved. Norway's oil and gas workers seemed to ease as output from the North Sea's biggest producer would only fall by about 7% even in case of a walkout, according to data from Norway's Petroleum Directorate. In Nigeria, violent attacks on the oil infrastructure knocked out some 600,000 barrels of daily oil production to around 1.25 million barrels per day between January and mid-June. But a tentative ceasefire means output has recovered by 200 to 300,000 barrels per day since then. Gold prices were higher in North America trade on Wednesday, holding on to solid overnight gains after data showed that the core PCE prices rose in line with the market expectations in May. The S&P 500 index had a range of 52 points, this is 2061 right now. Gold had a range of $15, it is at $1,315. Silver had a range of 70 cents, it is up to $18.34. And crude oil had almost $2 range at 49.31. Natural gas is trading at $2.84 at the moment with a range of 13 cents. Thursday we're going to have the natural gas storage change and the Friday Baker Hughes oil rig count. That is all from me. Thank you and have a nice day.